Hello, you guys. Um, welcome back. Actually, maybe it should be a welcome for myself. I know I haven't been making videos for the last 4 or 5 weeks. Honestly, I've just been enjoying my summer, taking some time for myself, with my girlfriend as well, with family, friends, and making videos wasn't really the main priority. But I am now back, and in today's video, and I know this is a video that a lot of you guys have been waiting for, and I know this was supposed to be a 30-day challenge, but I realized that given the content that I've been sharing on YouTube, I've pretty much explained everything. It's not going to take 30 days. It might take 30 days for you to learn how to actually trade correctly, but it's not going to take 30 days or 30 videos for you to understand how to trade. Now, this is the video that a lot of people have been asking for in person or through messages. And this is how and when I enter for positions. All right, so today we're going to talk about price action. What does that mean? How do I use it? We're going to talk about key levels, and we are going to talk about gaps. Okay, these are the three instances when and where I enter for positions. Now, before I start, I do want to specify something that a lot of people seem to forget when they watch my videos. Is that you guys, listen, let me show you. I took my time here, so I really want to, I'm pretty proud of this. I want to let you guys know that you suck, okay? Let me tell you, you suck at trading. Okay, every single person watching this video, asking questions, texting me, calling me, you suck. And this is exactly why you're here. This is exactly why you're watching my videos. It's because let's just call it what it is. If you were good, you wouldn't be watching. You wouldn't be watching me right now. You would just be searching for answers. You wouldn't be searching for answers. Uh, be looking for help or trying to figure out why things are clicking. Now, here's the plot twist. You don't actually suck, okay? You're here because you're trying. You're here because you saw my lifestyle, maybe on Instagram, or someone else's success, and thought to yourself, "Man, I wish I could do that too." You're here because you want something better. You're here because you want freedom. You're here because you want to support your family. You're here because you want to stop struggling. You want to feel like you matter in your own life. And to be honest, I respect that. I actually honor that, but we got to be straight with you. If you're trading just for the lifestyle, if I'm being honest, you're not going to make it. If you're only here because you saw someone post profits and, I don't know, a Rolex or a nice car online, or because you're broke and you think this is the golden ticket to get out of your brokenessness, even if I don't even know if that's the word, but let's just call it a word, it won't work, okay? You actually have to enjoy trading. You have to enjoy this. And you want to understand how it works to the point that if you were to not make any money for the next 6 months, you'd still show up to figure out how to make money for the next upcoming months, because that's the level of obsession this game requires. Okay, now let's talk about some of you that are trading without jobs. Listen, I love you guys, okay? And I'm making these videos so it could be accessible for everyone and anyone. But let me be honest. You cannot trade without having a job, okay? Trading is not a replacement for income when you're just starting. If you're down to your last $50 and you're using that to buy an evaluation to get a funded account, my guy, you're setting yourself. I wouldn't say my girl, because what I'm saying, I already got a girlfriend, but you know what I'm saying. Anyways, but honestly, if you're doing this, you're oh my goodness, bro, if you're doing this, you're honestly setting yourself up for failure. If you're using the last few pennies you have in your account, you're taking the challenge. You're taking that exam in survival mode. You're gonna be stressed, and you're gonna tell yourself that every single trade needs to work, and that pressure will make you break every single rule in the book. If you watch my video on why most people fail at trading, all of these rules, fear of missing out, greed, impatience, the gambling part, trying to make your money back. All these silly mistakes, you will make them if you use trading as your last straw. Even if you pass the exam, now what? Even if you pass the exam, let's say you pass the exam with your last $50. Then you have to scrape together another $240 $240 that I don't know where you're gonna pull that out from to activate that funded account. And now that you know that all your trades are actually money, it's actually money you can make and cash out at the end of the week after 5 winning days. Now your life trades, you're taking life trades with the fear of losing your only lifeline. And how do you think that ends? And I know. Okay, you guys tell yourselves, this time is different. I'm different. I'm not like the other people. Listen, bro. I made this nice little drawing here. Okay. See all this? Do you really think, you see that little red character? Do you really think that this is you, alright? Do you really think that you're better than all of these ones? All of these other people that are either taking trades or learning trading or have been in the trading game, do you honestly feel like you're better than them? I'm not saying you're not. I'm not saying you're not going to be better than them. But all I'm saying is you have to be realistic with yourself. Statistically, and I've made some research, the number of people that go through an exam and successfully pass the exam and get a funded account is between 5 to 10%. Now, out of that 5 to 10%, there's only 2 to 5% that manage to get a payout, that managed to get one singular payout, that managed to withdraw at least once. And out of that 5 to 2%, there's less than 1% that managed to get 5 payouts, and therefore we would say they're profitable, because if you manage to get 5 payouts, you're obviously making more than what you've spent to get the accounts. So out of all these statistics, technically, it means that less than 1% of people are profitable. Now, I'm not saying all this to discourage you, okay? And I'm just saying this because I've seen a lot of people crash out after 3 days of trading. They fail evaluations. They blow funded accounts. Not because they're dumb. I'm not saying you guys are dumb. I'm explaining it and you're probably seeing it. Trading is super easy. It's just theory. And then it's just practice. You just have to look at the markets and, detect certain patterns that keep happening over and over and over again. And then you just know what to do. It's not because you don't have the skill. It's not because you're dumb that you're crashing out or failing evaluations. It's because you're desperate. If you're desperate while you trade, you're not gonna make it. You're gonna overthink every single trade, asking yourself why you're taking a trade. Why are you in drawdown? Why is your position in red when you thought it was gonna be up? And you start reacting. You start hoping, and hope, my guy, is not a strategy. And this is why I wrote this right here. Proverbs 21:5. This is what the Bible says. So the plan of the diligent, it says, the plans of the diligent lead surely to abundance, but everyone who is hasty comes only to poverty. If you're moving fast, hoping trading will fix your life tomorrow, you will rush into decisions that will absolutely ruin your trading, will absolutely ruin your future, actually. Trading isn't just about making money. It's actually a life lesson. Okay? So back to what I said earlier. You guys don't suck, okay? Some of you are parents. I know some of you are parents I've personally talked to. Some of you are immigrants trying to escape the paycheck to paycheck life. Even not just immigrants. I know some people in real life just trying to escape the paycheck to paycheck lifestyle. Some of you are just trying to feel proud of yourself again through trading. I've heard your stories. Honestly, I know some people here have really hard times right now. And while you may not be good at trading just yet, I noticed that you have courage to take on such a leap, to take on such a jump and learn that trading, because you've seen results and you want to make some changes in your life. So, and I respect that more than anyone flashing profits on Instagram. Okay, I respect you people fighting for something in your lives rather than seeing you guys flash that money, wanting to trade because you want to flash money around. Okay, but here's a reality check. If what I said at the beginning actually hurt your feelings, if what I said about this is maybe not for you actually hurt your feelings, you, to be honest, trading might not be for you. Because this game, trading will humble you 10 times worse than I ever could. 10 times worse than any of the words I just said at the beginning of the video. If you're losing a trade, it will break you emotionally. If you're missing a setup, if you miss a setup, oh my goodness, if you miss a setup and you see it went your way and you didn't take the trade, you didn't take the position, you missed on some money, and it ruins your entire day, it's not for you. You know, it's okay to miss setups. There's always setups. Trading is a 5 day out of 7 per, like 5 out of 7 days per week. You will get setups every single day. Okay? If you need money so bad, you're consistently panicking and you think trading is your only way out, it's not for you. You're not ready to trade full time, and that's okay. You know? Let's just be honest about that. I'm just saying this to preserve you and tell you that, you know, just basically protecting you from spending so much money and time on something that you might not do on the long run for long-term investments. Okay? And now I'm talking about specific day trading. You might want to do investments. You might want to do some what we call swing trading, so it's over multiple days. But day trading, if any of these difficulties as I've mentioned are going on in your life, I do not recommend it. Okay, I'm only saying this because I care about you guys and I want you guys to win, but I want you guys to win on the right foundation. Okay? So this week, actually, let's focus on what we're supposed to see in today's video. Let's talk about price action. Let's talk about key levels, gaps, and how it all works. All right, so this is the live market. So as I said, today we're going to talk about price action. We're going to talk about key levels. We're going to talk about gaps. These are all the ways in which I enter for positions. So first of all, let's talk about key levels. So what is a key level? And this is really my main strategy while I trade, okay? So a key level, very simple. A key level is just an area, a level. Some people call it support. Some people call it support and resistance. Some people call it liquidity areas. I just call them key levels. Honestly, it doesn't change anything. Let me just lock myself so I don't make any mistake here. I already made my money for today. Okay, so let me just make sure I'm locked out. Bro, did I not just lock myself out? Okay. Dude. Okay, let me just do this so I don't press on buy on accident. So, key levels. Let me go back to it. So, you see this golden zone right here? This golden rectangle I just made here. This would be a key level. Let me tell you why. So, a key level is essentially just a level at which the price comes back naturally multiple times. Okay, so you can see that the price, after going up, went all the way up. It's an approximate level, by the way. It's not a precise area. It's approximate. It's very approximate, okay? Now you can see that the price went on this 1 hour chart, by the way. I'm on the 1 hour time frame, so each candlestick represents an hour in the day, okay? Now you can see that this zone right here is a key level. Why? Because the price, after bouncing and touching this level, started dropping down. And then it came to retest it again, and it came to drop back down. Eventually drop back down a lot more to go all the way up to do what? Touch the same key level. It's like a roof. It's like a ceiling, okay? Every time it touches the ceiling, it starts dropping down. Comes back up to it, drops down. Comes back up to it, drops down. Comes back up to it, drops down. Until eventually we do go through. Okay, so this is just it, guys. This is a key level. Now, when do I use key levels? So key levels, by the way, are levels, and this is what's amazing about it. These levels are respected through time. Okay, let me show you exactly what I mean. So if I extend this to the left and I go back in time, you will see that this key level, oh goodness, look at that. This is beautiful. You can see that this same key level is respected multiple times through time. You see here how this level that I drew over here was respected about a week ago. Right here, you can see the price drove all the way drove all the way down here and respected this level. And at some point, this roof that we had was a table. Isn't that beautiful? And then so price drove all the way down, bounced up from it, drove all the way down again, bounced up, drove all the way down until eventually we started pumping all the way up. And you can see it did it multiple times. This time it was a roof and it started driving all the way down. And if I go back in time, last month, you can see that the price also respected this level. Here you guys might not see it, but it also respected this level. So it went all the way up. And then after touching this level, it started driving all the way down. And this is the beautiful part about key levels, guys, is that they are respected through time. Now, obviously, this is all-time high, so there's going to be nothing further back. Okay? Now, let's do it again. Let me show you again. So there would be a key level somewhere over here. I would draw this over here. Why would I draw it here? Simple, really. Or you know what? Let me draw it over here. Here, you can see there's a key level. Why? Why is this a key level? There's multiple key levels, by the way. There's a lot of key levels on this chart. Okay? And then I'll explain exactly how I use them when I trade. Let me just add a start here. So, using my arrow here. If I look at this level, you can see price drove all the way down, touched this level, went all the way up to touch the previous level, to go all the way down to touch the same level, to go all the way up, to go all the way down. And you can see this is like the basement. This is like the level that's been touched multiple times over time to give us that continuation to the upside. This again is approximate, guys. Okay, I can put it around here just to make sure that it touches over here as well. And look, the beauty of it again, if I go here, extend to the just so you guys can realize how powerful levels are, how powerful these levels are. If I extend to the left, you can see in time here it was touched and it started resisting. Obviously this is not quite a big resistance, but it still drove down before we eventually went over it, dropped down a little bit again to retest the area, and then we started driving all the way up. Isn't that beautiful? Over here 2 weeks ago in July, 3 weeks ago actually, this was a level. So we went all the way down, and before continuing further down, we came back to retest this same level before driving all the way down. You can see it got respected here, got respected here. So key levels, you cannot convince me that they are not useful, okay? They are being respected like crazy, and it's always been the same. Respected here, respected here, respected here. Like, come on, guys. Respected here as well. Like, how can... I just sometimes can't understand why some people are overlooking this, because this is just working like a charm. Now, how do I use them to trade? Let's say I'm here. Okay, these are the live markets. So how would I analyze the live markets as we speak? I would say that here somewhere there would be a key level, which is what we're aiming at, this is where we are trying to go. Why would I put it at the top here? The reason for that is because I noticed that before we had this massive drop, from where? From this level right here, which so happens to also be a key level that's been respected here. You can see that we drove all the way down, and we ended up bouncing all the way up, But from which level? From around this area. This is very approximate, guys. Don't be asking me too many questions about why did you put it here and not just a little bit, like teeny tiny bit, a little up. I could have, honestly, it's just a detail, okay? It's just a detail. Now, you can see that price is going all the way up. So for me here, honestly, there would be no point for me to enter in a position. Why? Because we're pretty much already at a key level. And it's too uncertain whether we are going to go and continue higher to maybe another key level that would be over here. Let me draw it for you guys to show you exactly why I would put it over here. You guys probably see it already, but let me do this. And there would be another key level over here. Okay. Let me tell you guys. So, if we look at this chart, I would not enter for any position over here because we are about to touch this key level, and it is uncertain as we speak whether it's going to go all the way through it or if it's going to bounce down. So there's two scenarios. Either it goes through, comes back to maybe retest the area, and then continue up to the next level. Or maybe it's going to reject this area, come down here, and do whatever it has to do. Okay? Now, this is the reason why it's not worth it to enter here, because we don't even know how it's going to react to this level. And the day is pretty much over. It's already almost 3 p.m. The market's closed at 4 where I'm at. So, this is how I use my levels. If I see that we're respecting a level, I'm obviously going to go in the direction in which the market seems to want to go, up until the next level. Okay? Now, let me show you guys this key level right here, how it's been respected 2 times as well. Can see that this level, I put it over here because of this. And if you look here, guys, it's been respected here. It's been respected here. It's been respected here. It's been respected here. Like, this is just easy. It's been respected here. It's been respected over here. And this is all-time high, so there's nothing else. Isn't that beautiful? Like, come on, guys. This one, it's been respected multiple times. Again, it's been respected here, been respected here, been respected here. This is very approximate. Okay, this is very hard to tell. This was quite choppy here. So honestly, I wouldn't really bother going over this. I don't know what happened here, but it was very flippin' choppy. Again, let me see. We had a little bit of a fight here with this one singular red candle, but we eventually just went through it. So this is what I do, guys, to be honest. I just wait for key levels to get tapped, and then I decide whether I want to sell or buy, depending on how it reacts to these key levels. Now, what I have to say, though, is the higher the time frame on which you put these key levels, the more accurate it is. If you put a key level on a 15 minutes, okay, let's say I put, let me just delete all this. Let's say I put a key level here. I don't even know where to put one, actually. Like, there's too much information on the 15 minutes. Let's say, okay. Not what I wanted to do. Listen, you can already probably tell, but it's pretty hard to put a key level on a low time frame. Just because it's not accurate. Look at this. Why would I put it here? I mean, it would make sense. I'm pretty sure on the 1 hour it would make sense. Yeah, it would make sense. This is a key level. That's just, I guess my eyes are used to already finding key levels. But you can probably tell that it's much harder to find key levels on lower time frames. You know, like what is this? Like, where am I supposed to put my key level? It's just going up. And here it's going up. I don't know where to put the levels, you know? So that is the first strategy, guys, that I use to take trades, okay? I'm not going to go too long about this. All I do is wait for a reaction. I'll make another video exactly showing live trades on how I take positions based on key levels. And obviously, guys, this is not a 100% win rate strategy, okay? You have to use your head. It's not just about blindly buying or selling. There is multiple factors you have to take in before taking a position. What I always say is you have to have 3 confirmations minimum in order to enter for a position, okay? Now, we'll talk about this in upcoming video, probably tomorrow, I will explain what confirmations you could get in order to enter a position. But based on everything that I've said so far within the videos, if you have 3 confirmations about the market going in one specific direction, chances are it is probably going to go in that direction. Okay? Now, the second way I enter for positions is by looking at price action. Now, let me explain myself. As we know, on a candlestick, oops. Let me draw a red one. As we know on a candlestick, we have the body and we have the wick, right? So each candlestick, as you can see, most likely has a body and a wick. So the wicks representing where the price went within the same candlestick, and the body representing either it's a sell or buy, either the price is going down or up within that time frame. Okay, so saying that, price action. So if I was to see a red candlestick just drop, okay, as soon as it opens, it drops, leaving not a single top wick, not a single wick at the top here. What I mean by that is there's nothing over here. There's no wicks. What does that tell me? It tells me that price, as soon as price opened, all it did was go down. This is all it means. It did not go a little bit up. It just went straight down. And guys, I did the math. There is a 93% chance, if I'm correct. There's a 93% chance of a candlestick. So actually, let me do it. Let me say the opposite. There's a 7% chance that a candlestick closes without a top wick. So let me write it down. Actually, there's a 7% chance that a red candle closes without a top wick. There's a 7% chance, guys. 7% chance. That means you have all the odds with you that this candlestick, while it's still moving, might go all the way up to make at least the smallest of the top wicks. And this is why I enter sometimes. This is where I enter sometimes. Okay, actually quite a lot of times. So I would see a red candlestick go down without any single top wick, without a single top wick. Let me give you an example. Most definitely this one. Okay, there's multiple here I want to talk about. So let me just put arrows so I don't forget. So there's one right here that I want to talk about. And there's also this one. So this is a news candlestick, by the way, which is why you can see there's a huge wick. But I was there this morning when it happened. So what price did is, without any notice, without any bottom wick, the price went all the way up. So it went all the way up without a single bottom wick. So the same thing that I've just mentioned here, the same information that I just mentioned here, 7% chance that a red candle closes without a top wick. It's the same statistic when it comes to a green candlestick closing without a bottom wick. So let me write it down. So there's a 7% chance that a green candle closes without a bottom wick. So you have 90% chance that you're correct. There's a 90% chance that you can catch a trade because a candlestick does not have a bottom wick. And that, by the way, guys, is specifically on Top Step X. Okay, this is specifically on Top Step X. I know that there's more platforms that have different ways of showing their graphics, therefore sometimes changing how a candlestick looks. But that, oh, I did not press on that. But that is, I did not press on that. That is specifically on Top Step X, by the way, guys, that I noticed this pattern. Okay, and I'm taking every advantage that I can for this strategy. Okay, so given that statistic, like I said this morning, this is how I made my money. Price went all the way up, and I started seeing rejection. So what did I do? I noticed that let me show you exactly how it looked like. It looked like this. And let's just add, for the beauty of it, let's just add just a little top wick right here. Okay? So it looked exactly like this. Now, knowing the fact that there is no bottom wick, what do? I enter for sell. I see that price is rejecting. I obviously wait. You don't want to be catching a falling knife or catching a sword going up. You want to wait to see that price is starting to slow down at a certain extent, at a certain price. So what I did is I waited for price to start driving down, and then all I did was enter for a sell position. Boom. And my target was just the bottom of the wick. So the bottom of the candlestick. So all I had to wait for is the candlestick to drive all the way down and hit that TP. That's it, guys. Simple as that. This is the simplest strategy. Okay? This is just simple. You just wait for rejection and take the opposite trade. Now, what happens sometimes is that the candlestick will close. Let's take this example right here. Candlestick will close without rejection, and it'll have, let's say this red one doesn't have a top wick. What happens next is that, okay, fine. The next candlestick will go ahead and make that top wick. Simple as that. Simple as that. You just wait for the next candlestick and make sure that it goes in the right direction, and all you have to do is press buy, place your profit target at the top of this candlestick to make sure, to make profits on making this top wick over here, and that's it. That's just it. Okay, and you can see this happens multiple times over. Let me see. I'm trying to find one here. Either green or red. Now, obviously, hold on. Let me see. Look at this. Obviously, you guys, don't be stupid as well. If you see a candlestick, look at this. This one has no bottom wick. This was released after a news. So a news came out. Let me see what news that was. Is that FOMC? Yeah, that was Powell. Okay, guys, look. If a news come out, I don't know, someone dies, or the inflation rate goes down, or the economy's going super good, and you just see the price skyrocketing without a bottom wick, but you see that price just went up like bro, look at this candlestick. Like, also just don't be an idiot, okay? Like, don't. You see the price is obviously abnormally skyrocketing. Why would you expect this candlestick to flip all the way back down and make a bottom? Like, come on, guys. This is the only thing you don't press sell on. Like, you do not want to do that, okay? Like, if the price is already here and you're pressing sell, you got cooked. If the price is here and you press sell, well, I guess you could somewhat catch something here. But don't be stupid, okay? This is news. You don't trade during news. You can trade during news, but it's pretty much gambling, okay? But this is probably the only exception, okay? If there's a news that releases and you're just pressing buy blindly, like, at this point you might as well just give me your money, bro. So I'm trying to find if there's another one here. Now, it does happen sometimes. See, it's not 100% of the times, right? Here, for example, we have a candlestick going down without a top wick, but it took quite a long time before we went ahead and make that top wick right here. You can see it kind of struggle in this candlestick. So it's not 100% win rate, but it does happen a lot. Like 93% of the time it will flip. Okay? All right. So the other way I trade is whenever there's a gap in the market. Now, let me see if I can, oh, there it is. There's one right here. Here is the perfect example. There's a gap right here. So how do gaps get formed? You probably can't see it. Let me zoom in here. So what is a gap? So a gap is basically a jump in price. I'll explain everything. So how does it happen? What to do about it? Why does it happen? So as you can see, put my arrow here, between this candlestick, July 25th, and this candlestick, July 27th, there's a big hole. Like, it's like price jump from here to here in a span of 2 days. So this was over the weekend, which is why you see it's July 25th, and this is July 27th. 2 days passed because that was obviously the weekend. Oh, shoot. I got to attend a meeting in 4 minutes. So this is the easiest trade, guys. Literally, all you have to do when the market opens is wait for a change of character. If you haven't watched the videos on trading change of characters, go watch it. All you have to do is wait for a change of character and, oh my goodness, just enter for sells or buys depending on where the gap is. Let's say there's a change of character over here. All you have to do literally is press sell and your TP is at the very top of the gap. That is it. Literally, that is it. And I've done this countless times, you guys. Look, there's a gap right here. And it works every single... I haven't lost a single trade doing this, to be honest. This is like the one thing that's giving me 100% win rate. Look, there's a gap right here. All you got to do, wait for a change of character somewhere here. Press buy, fill the gap. Easy. Easy money. Let me see if I can find another one. What is this? Look at this. Look at this. Price closed June 20th, June 22nd. There's a small gap over here. Boom. All you got to do, wait for a change of character, press buy, boom, skyrocketing. Like, this is simple. Simple dimple. Now, you guys probably can't see it over here. July 05. Oh, this is probably news then. Oh, no. This is just intraday. So basically, this is the same day. It's just that the markets close for an hour, right? So you can see the price jumps from 2 p.m. to 6 p.m. So you can see the price closed over here and it opened over here. So essentially, there was a gap right here. And all it did was fill up that gap. Easy as flip, guys. Easy. Look at this. Easy. There's a jump from price from here to here. What do we do first thing in the morning? This is May 18th, May 16th. This is over the weekend. There's a gap. Boom. What do we do? As soon as the price, the candlestick opens, we just go ahead and fill up that gap. Easy peasy lemon squeezy. Oh, you guys. So let me see. Let me see if I can find the Discord server here. No. I'll show you a picture, guys, eventually. Oh, what the heck is that feed, bro? I promise you guys my feed is normal. I don't know. Yeah, it's all good. It's all good. Okay. You guys did not see anything. Alright, so you guys, I will leave you on that. And if you have questions, reach out. Let me know.